All right, so let's start with the general partnership, which I think is the simplest business entity that you can have. And it's so simple that a general partnership does not require any formal filing with the state. So that means, you know what? If I and any other person, have a written agreement, okay, just bring out a piece of paper, some, clauses on it, and then we sign, you know what? It's just been created a general partnership, okay? As simple as that. And then, you know what? The amazing thing that we don't even need a written agreement, but I strongly recommend that you got a written agreement, you got some proof, right? But if just two persons have a oral agreement, which means that my word is my code or something. So you know what? If it's just an oral agreement, it still counts as a general partnership. Okay, so yeah, sometimes just how two people behave in a business together, they consider they are partners. Okay, as simple as that. So it's just so simple to start up with this business entity that it comes up with a lot of pitfalls that I'm going to introduce later. But here's the thing: the capitalization, which means that the money come into the business, the capital, like human capital, is also the capital, like the labor, right? If you work hard for the partnership, that's also considered the capital. The capitalization comes directly from the partners themselves. So multiple person, if you want to form a general partnership, you know what? They input their labor, their work, their asset. You know what? You can use my car, something like that, right? You can use my computer. All this is like asset, as well as they use their personal money in this kind of general partnership. So you know what? Their money as well. So basically, capitalization, the capital comes directly from the partners themselves. Okay, and when you operate this general partnership, so every partner has an equal right to manage the business, unless if there's say a oral agreement or written agreement, the partnership agreement says otherwise. Say, hey, this person have more right than this person, right? This is just written in the agreement. Unless the agreement says so, operationally, most of the time, every partner has an equal right. Okay, so here comes to the pitfall that I said earlier, is about the liabilities. Okay, the big downside risk is the liability, because since it's so easy to set up, it's so hard to prove that this partnership is like a separate entity than you. Okay, basically it's just you. Okay, you are doing business with someone, okay, directly. So partners are jointly and severely liable for all this, partnership debt. Okay, for personally responsible for all of the partnership debt. That's a huge risk if you think about it. Okay, so you know what? That's a huge issue where you just want to start up a business in the form of a general partnership. Okay, so another thing is that what about the partnership earns a lot of money and I want to transfer it, right? So for example, I want to say my mate, I'm like a really good relationship with my mate, and I want to like transfer my earning business to my mate. Okay, can you do that? Yes, of course. A partner can transfer their financial interest. Okay, it's only money, you can transfer the financial interest, but still you are the partner. Okay, so basically, if there is like debt, like liabilities of the general partnership, you can't remove that like your duties and your liabilities as a partner. You're still going to pay these liabilities, because you might say, well, what about I did not earn anything? I already transfer all the interest to my mate. Okay, it's my mate running the business now, but still you are considered a partner. Okay, so yeah, that's the hard truth about the liability of a general partnership. It's not so fancy, right? As you just getting started, you might say, well, general partnership is so good, right? You don't need to file anything, but in fact, they've got a huge downside, okay? And of course, for tax purpose, the partnership itself does not pay tax, do not pay, but it's what I consider the pass-through structure, okay? So basically, if you want to like report, it's more about tax reporting entity, okay? So this is just an entity that you report tax, but you know what? When it comes to actually pay the tax, the partners pay the tax on their share of the income, okay? And as I said, it's like pass through. So everything that is general partnership that's earned and need to be taxed, you need to pass through to the partner. Okay, so yeah. And for determination, so finally, if one of the partners like dissociate, right? Say, hey, I don't want in this partnership. We're done here. Okay, so basically, that's generally leads to dissolution. Okay, so that's the end of a partnership, and yeah, basically, that's the end. That's the winding up of the whole partnership.